So there's no recovery in the United States. The central banks don't know what to do. As you pointed out, over $10 trillion in negative bond yields. Oh, and now, of course, as of Wednesday, the European Central Bank started buying corporate bonds. I mean, this is unheard of. You know what it's called, by the way, when you have a merger of state and corporate powers? Fascism.
A secret Canadian gold play revealed. Near-term gold producer is about to become the hottest hard asset play in North America. Deep value in production in 2016. A mill that is worth over $125 million. Today, the entire company's market cap is less than $25 million. Gold production is being ramped up to begin in less than 12 months. According to their PEA, this will be a low-cost producer with a cash cost of $613 per ounce of gold. Learn more at crushthestreet.com/MXL.
Hello, everyone, and welcome into crushthestreet.com. I am joined today with someone who's an icon in the alternative media space. He pulls no punches, and he tells the truth for what it is. His name is Gerald Celente of the Trends Journal, publisher of the Trends Journal, and he's a trends forecaster, business consultant, an author, and this is a man who's been sounding the alarm for what is to come, and he's someone who understands geopolitics and the economy to a very large degree, and I'm very excited to be speaking with him today. Gerald Celente, thanks for joining me.
Thanks for having me on, Kenneth.
Mr. Celente, Fitch and Zero Hedge reported last week for the first time ever, negative yielding government debt has risen above the 10 trillion mark. And now 1/3 of all global government debt has a negative yield. And if you knew your principal was going to get eaten away at, you would probably do something drastic and do whatever you need to do to protect your wealth. And I want to ask you, what are you seeing people turning towards to protect themselves against this negative interest rate environment?
Well, listen to what people like George Soros are doing. He's made a big bearish bet, and he's all of a sudden he's going into gold and gold mining stocks, and he's done very well with them since he's gone in. I'm certainly not a fan of George Soros on a socio-economic and geopolitical level, but when the guy comes to making business decisions and betting on the markets, I mean, he's a real pro. And all of a sudden you see a guy like him going into gold and gold mining stocks, and you listen to other people like Druckenmiller and others warning about the stock markets, and then you look at the realities. And the realities, look at the banking stocks, because you're talking about negative interest rates. They have to have interest rates much higher to make money, so they could loan it back out, and it's hurting their profits. So whether you're looking at Europe, you're looking across Japan. Matter of fact, one of Japan's largest banks, is now they're raising a lot of noise about not participating in bond deals anymore because of the negative interest rates. The banks cannot make money with negative interest rates. And so we're seeing a lot of investors turn to gold. And you again, the only reason that gold prices retracted they began the year on a rise up over 20% since the beginning of the new year, and the only minor downtick it had was when the Fed shills, one after another, came out about 3 weeks ago, sounding the alarm that the American economy was strong and they were going to raise interest rates. So that's when gold retracted a bit. And then, of course, they came out on Friday with the job numbers, and only 38,000 jobs were created. and they're expecting around 160,000 jobs. And then you look at the whole year, and job creation has been, very low compared to a year ago. So there's no recovery in the United States. The central banks don't know what to do. As you pointed out, over $10 trillion in negative bond yields. Oh, and now, of course, as of Wednesday, the European Central Bank started buying corporate bonds. I mean, this is unheard of. You know what it's called, by the way, when you have a merger of state and corporate powers? And Draghi over there, the front man that's playing the head of the ECB, that was the former head of the Goldman Sachs gang's European division. I mean, he should know this, being an Italian. Mussolini called the merger of state and corporate powers fascism. But when I listen to Draghi speak, I kind of get the drift that the cat, maybe has that fascist attitude because he is really arrogant in the way that he spells out what the central banks have to do, what their mandate is, and why they should do it. It kind of reminds me, I wonder why Christ drove out the money changes out of the temple. I guess central bankers really haven't changed, have they?
Not at all, Mr. Celente. You brought up something that I kind of want to touch on. And, low interest rates, zero interest rates here in the U.S. seem to be good for banks, and you can correct me if I'm wrong. They're able to borrow money, make risk-free investments, speculate. But we're seeing now that negative interest rates has now crossed the line where these low interest rates going into negative territory is actually hurting the banks. Would you care to elaborate on this just a little more? And just your perspective, just so if people are wondering why zero interest rates were good, but now negative interest rates are bad.
Well, again, with the negative interest rates, you're looking at banks. It's happening again in Europe. They're talking about putting their money in vaults rather than storing it with the central bank, because the central bank actually charges them to hold their money. And they're doing this in the belief that they're going to force the banks to loan more money into the system to drive the economies. So again, there makes no, and because the rates are so low, I mean, you cannot make money with mortgages or other issuances of loans coming from negative and going into any kind of rate much higher. The profit margin isn't there, and it's hurting insurance companies because they used to buy bonds, safe assets. They get several percent, and they'd be able to cover their expenditures on what they had figured out, what it's going to cost them, and what they need to get interest on. It was a very clear formula. That formula no longer exists. So now it's forcing insurance companies and others to start making speculative moves. And you mentioned about borrowing money for free. That's the only thing that has juiced the American economy, was when they had zero interest rate policy. You're looking at stock buybacks of over, $60 billion a month. They're borrowing the money for nothing to play. You're looking at merger and acquisition activity in 2015 was the highest on record. Why? You're borrowing the money at nothing, and you're buying up other companies. So all you're doing is building debt, but you're not paying a lot of interest on it. And who's it really hurting? It's hurting we, the little people, because there's no such thing anymore as savings accounts or certificates of deposit that you could take out, and people actually used to retire on this stuff.
That's right.
So the whole thing is skewed, and the negative interest rates, again, now that's hurting the banks.
Well, that's interesting because, the central banks are have typically, historically, we've seen it throughout time, been kind of the representative of the other banks out there, and they've always acted in the best interest of the big banks and the government. And now they're doing things that are not in the best interest of the banks that are out there. And it's really interesting. Is it just because that they're at a point now where they don't have a good option, and they're out of there's no room for them to move, and anything that they do from this point on is just negative, the implosion point?
Yeah, they don't know what to do. Again, when you see a guy like George Soros turning bearish and saying it, you can see the impact of what's going on here. And again, you're looking at the repercussions in Japan, in Europe, and around the globe. They don't know what to do. Look what's going on in China. Despite the trillions of yuan that they've put into stimulus, they cannot regenerate growth in that economy. You just saw exports fall over 4% last month in China. Take a look at Japan. With Abenomics and negative interest rates, what are we looking at? Exports down 10%, and then you say, well, the yen got stronger even though they went into negative territory. So, okay, if the yen got stronger, and Japan is a very strong importing nation because they need a lot of stuff, that island, they should be importing more with a strong yen, theoretically, correct? Mm-hmm. No. Their imports were down 23%.
Right.
So I'm making the point. I know you know, but I'm saying, to put it into perspective, this shows you how desperate the global economy is. It's showing you that the central banks have run out of powder, and what they've done is they created a great asset bubble, and more importantly, they've devalued their currencies. The currencies aren't worth the digital paper they're not printed on.
Well, I couldn't agree with you more, and it really does feel like the world is out of powder. The central banks are out of powder, and I want to get your thoughts right here on what the Fed might do with interest rates. We touched on it earlier in this interview, and kind of how it relates to gold, because when it comes to a zero interest rate yield environment, people would go to gold. But when interest rates go up, now investors start thinking, well, there's interest rate yields that they can invest in, and there might not be as much of a demand for hard assets such as gold. And I want to get your thoughts here. If interest rates do go up, is gold in a position to go lower, or do you think it will hold up just because of the unique scenario that we're in here in 2016?
I think gold will hold up. Of course, nothing goes straight up or straight down, and there are always wild cards. And what we're looking at, though, okay, let's say the Fed raises interest rates. Remember, they were going to raise it 4 times after they raised it once in 2015 in December. The line on the street was that they were going to raise it 4 times in 2016.
Right.
Now we're halfway through the year. They haven't raised it at all. If they do raise it, what are they going to do? Raise it 25 basis points?
Mm-hmm. Okay,
that means they've raised it 50 basis points in 10 years. It still adds up to nothing.
Nothing, yeah.
So what we're saying, though, is here is the problem. And this is why it needs to be, as we see it, our system of forecasting trends is called Global-Nomics. It's not only looking at things globally, but making connections between different fields. So when we talk about Global-Nomics, and you're just putting it into the geopolitical perspective, here's the deal. It's not only the United States that the Fed is worried about with our economy. and they can't no longer. They've been betting and continually saying that they've raised interest rates because of strong job growth. And then when you really look at the job growth, it hasn't been that strong. And by the way, the jobs that have been created, everyone knows they don't pay a lot of money. But more importantly than that, by lowering interest rates, they didn't even create those jobs, because most of the jobs that have been created, a sizable portion, have been in health, in education, and social services. Those jobs are not created by the market forces. They're created by a thing called taxpayers.
Right.
We pay for health, education, and social services out of our taxes and what we're being forced to pay for medical care. So even these low interest rates have not created those jobs. So now they don't have that one to go on, but now I want to go global. Go back to when they went into the rounds of quantitative easing and zero interest rate policy. We had a flood of hot money going into emerging markets because the dough was so cheap and they were in dollars. So these emerging markets, particularly the resource-rich ones, were borrowing money, whether it was corporations or countries. Now the commodity cycle is over and in decline, and has been for a year. Now these emerging markets have to pay back their debt. They borrowed the debt in dollars. Their currencies are declining. They have to pay it back with more of their declining currencies, which makes it almost impossible to buy back. Let's go back to why they can't raise interest rates much. Because of all of these trillions of dollars in debt in emerging markets that came when the hot money flew out of the United States into these countries that they now have to pay back as their currencies are declining.
Wow.
So that is the other pressure that's stopping the Fed from raising interest rates too much. So now going back to gold, what would you rather hold? Would you rather hold gold or Brazilian real? Would you rather hold gold or Mexican pesos or Colombian pesos or Norwegian krona or Canadian dollars or Australian dollars, as they're all declining, Russian ruble, even the South African rand, or a very rich country in gold, but hey, guess what? Things are really tough over there. The rand is declining. So when you look at gold, to me, and that's what we look at the Trends Research Institute, we're looking at it in comparison to other currencies. The dollar is only one of the players.
Is there any telling as to how the chips will settle, with these countries seeing their currencies devalue and having to pay the U.S.? Who's going to suffer in that? The countries that need to pay, or the U.S. that needs to be paid up?
Well, both. And what's going to happen is you're seeing it already. You're seeing, again, all these are connected. You go back to our top trends of 2016, and global unrest was a big one of this. And you're looking at, for example, what's going on in Nigeria. Again, all things are connected. They're blowing the oil fields up. This is a country of about 130, 140 million people. And now it's in complete, it's in chaos because of declining oil prices and the civil unrest within the country because of corruption. And then you go around and you're seeing that happen, whether it's in Venezuela. Look what's going on in Brazil. So again, it's an impact that's global. And then you bring it to the other. Look what's going on in Saudi Arabia, Bahrain, Oman, the downgrading of debt, the downgrading of the countries,
right,
by Moody's and Fitch. So what happens is, you again, to look at it in a global-nomic perspective, because it's social unrest, civil wars, and when all else fails, they take you to war. This is an old scenario. All you have to do is go back, and it's not that old, World War II, Great Depression, crash of 29, Great Depression, currency wars, trade wars, World War.
Wow.
You're looking at the same scenario now. The panic of '08, the Great Recession, currency wars, trade wars, world wars. Look what the United States is doing with bringing the fleets into the South China Sea, into the NATO, going into the Russian borders, onto the Russian borders. And the buildup with now they're bringing in missile defense systems in Romania and into Poland. How louder do the war drums have to beat? Look at the pressure the United States is now putting on China, blaming them. Again, we don't take positions in these things. We call them as we see them. They're blaming China for exporting more product because they're dumping it. Of course they're dumping it. They have overcapacity. Go back to World War II. What was it about? Japan dumping product on the market. They don't tell that part of the story anymore.
No. Wow. Mr. Celente.
So again, going back to this, Kenneth, bringing gold back into the scenario, it's the ultimate safe haven asset for all the reasons that I said. And then when you put the other elements into geopolitical unrest, look at the refugee crises, the migrant crises. So again, that's why to us, and we don't give financial advice, gold is the ultimate safe haven asset. Has been since what? About 300 BC?
Yeah. Yeah, no, that's incredible advice right there, and I hope everyone was keenly listening to what you were saying. Mr. Celente, my mom is an Argentine. She grew up in Argentina and moved here to escape the economic problems and for a better future back in the 80s. And she tells me the stories of hyperinflation in the store that she and her parents used to run, and the corrupt government, the lies that came from the top, and the type of currency controls that she's seen. And it made me think of that because, here in the States, we've always had this genuine sort of trust for our government. And even the world, I would say, has this trust for the U.S. government, assuming that they're going to say and do the right thing. But man, watching that unemployment rate drop from 5% to 4.7% on one of the worst jobs report in 6 years, I got to start wondering if the faith in the American system is rapidly coming to an end with such a disconnect in things like the jobs numbers. And I'm wondering if it's going mainstream and not just, guys like us or are in the alternative media that are understanding this, or if people around the world that don't do this type of research are coming to the realization that something is not right.
Look around the world. First of all, there's nothing that they say, and I'm not a conspiracy theorist. There's nothing the government says that I believe. Read my lips, no new taxes. I didn't have sex with that woman, Monica Lewinsky. Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. Listen to Obama. The guy lied his way into office, and he's lying his way out. Now, one promise that he made is he kept. Why should I believe anything that they say? They have a long track record of lies and manipulating numbers. There's just no reason to believe them. Again, and the motto of the Trends Journal, think for yourself. We put the information out there, you look at it, we have the facts, the data, now analysis, now you take it, do what you want with it. We don't tell people how to think. So the whole world looks at America right now. I mean, I just talked about the wars going on in America. We're in Yemen, we're in Saudi, we're in Syria, we're in Iraq, we're in Afghanistan, we're in Somalia, we're in Sudan. We have African troops. We have troops throughout Africa in many nations. And this is a guy that ran that he was going to be the anti-war president. of the anti-truth president. So, of course, the world is looking at America with less favor. And then you look at this election that's going on between Trump and Clinton. Both of them, they're on. People look at that 64% of the population, in looking at both camps, don't trust them. Either of the candidates. They have a 64% negative truth rating.
Yeah.
So when you look at the entire government, but again, it's global. We're looking at the Brexit vote coming up now in less than 2 weeks. Look what just happened in Italy, in Rome. A member of the Five-Star Movement is on the way to becoming mayor. Look what happened in Austria. You saw the Freedom Party nearly win the first time since World War II. One of the major parties didn't win, and a minor party did win, the Green Party, and now that vote is up for contest. It's being contested. It was won by only 36,000 votes, and they found irregularities. Then you go to look what's going on in Europe with the AfD party, the Alternative for Deutschland. It all of a sudden, now it's gaining 25% of the vote in certain areas of Germany. Look what's going on in Spain with the Podemos party. Go around the world. It's happening everywhere but in the United States. There are new populist movements against the corrupt governments that have only enriched the rich, and I'm not making that up. The fact of the matter is that since quantitative easing, zero interest rate policy, and Obama and the administration that pretend to be populists, 95% of the wealth created since 2009 has gone to the 1%. Of course the people are angry. It's in the polls. 83% of the voters right now are voting against the 1%. And by the way, that's the one thing that Occupy Wall Street did. It brought that 1% into the real reality of what it is, almost, because the real number is 0.1%. Or 0.01%. And here's another number. 65 people in the world have more money than half the world's population. So this is what happens when the money gets into the hands of a too few and doesn't filter down. So you put it together, social unrest, antagonism among the people against the ruling classes, failing economic systems. How much longer do people have to put up with the BS from central banks to add up their failures? One failure after another. Show me success. And when you show me success, I'll look at it. But they can't show me any. So that's why we're saying put all the pieces together. It doesn't look like a happy ending. Europe, global growth is sliding back. Oil prices now they're back into retreat. The only reason they went up was because of the disruptions in Alberta, in Venezuela, in Nigeria, and Libya. And these things some of them are going to stay, some of them are going to go. But overall, there's too much product on the market, not enough demand, and this other hoax that the feds are talking about, that we have to bring inflation up to 2%. Who made that up? Yeah, man, I got a graduate degree. I never heard this baloney in my life. 2% inflation rate, as it's costing you more in health, in rent, in taxes, and everything else, and you want more inflation as the only wage increases only went up a measly 2.5%. So they're making this stuff up in Europe and the United States and around the world that we need more inflation. You have a deflationary cycle because you have a global economic downturn, a recession, and too much product and not enough demand. It's Economics 101.
Wow. Mr. Celente, you got me fired up over here, and I looked online and gold is still under 1,300 and silver is still under 20. And, when I see that, it makes me want to buy, especially after a conversation like this. So everyone, this was Gerald Celente of the Trends Journal. I mean, he's a rock star and an icon in the alternative media, and you can see how passionate he is. Mr. Celente, thank you so much for coming on the show with me today.
Well, thank you for having me, Kenneth. All the best.